This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. We are TheStreet.com.
An historic day. Janet Yellen tapped to be the next chair of the Federal Reserve. She'd be the central bank's first female chief in its 100-year history. But who is she, and what could she mean for your investments?
What's at stake? The world's largest retailer group says that the government shutdown could severely damage a key driver of economic activity, the consumer.
Just do it. The CEO of Nike, the Dow's newest member, says the company is designed to win. But does it have the right strategy to stay one step ahead of its rivals? All that and more tonight on Nightly Business Report for Wednesday, October 9th. Good evening, everyone. I'm Tyler Matheson.
And I'm Sue Herrera in for Susie Garrett tonight. Well, it was an historic day for Washington and also for the U.S. economy. As expected, President Obama nominated Janet Yellen, currently vice chairman of the Federal Reserve, to be the first woman ever to head up the nation's central bank. If her nomination passes in the Senate, and it is likely to, Yellen is expected to continue the easy money bond buying stimulus policies championed by Ben Bernanke. And that's exactly what a lot of people on Wall Street want. But who is Janet Yellen? What's her record at the Fed and her plans for the struggling economy? And what does her appointment mean for your money? Steve Leisman takes a closer look at the woman who would be chairman.
President Obama, in an historic announcement, nominated Janet Yellen today to become the first female chair of the Federal Reserve, putting the longtime Fed governor and economist in the hot seat at one of the most controversial moments in the central bank's 100-year history. In accepting the nomination, Yellen immediately called for unity among a fractious Fed that's divided over whether to continue extraordinary and controversial policies to stimulate the economy.
The Fed has powerful tools to influence the economy and the financial system. But I believe its greatest strength rests in its capacity to approach important decisions with expertise and objectivity, to vigorously debate diverse views, and then to unite behind its response.
Yellen also somewhat broke with her predecessor, Ben Bernanke, by striking a more populist tone today, pledging to address the concerns of average Americans through Fed policy.
The mandate of the Federal Reserve is to serve all the American people. And too many Americans still can't find a job and worry how they'll pay their bills and provide for their families. The Federal Reserve can help if it does its job effectively.
Obama had strong words of praise for Bernanke, who will leave office January 31st, words that had pretty much eluded the president during much of Bernanke's tenure.
For nearly 8 years, Ben has led the Fed through some of the most daunting economic challenges of our lifetime. So today I just want to take a minute to pay tribute to Ben for his extraordinary service.
Most in the market believe Yellen will continue the policies of Bernanke and is thought to be someone who would be quicker to do even more stimulus for the economy if the economy doesn't improve and unemployment doesn't fall as fast as the Fed would like. For Nightly Business Report, I'm Steve Leisman.
Well, the minutes from the Federal Reserve's September policy meeting, the one where the central bank decided not to pull back on its bond buying program, show that the meeting was a contentious one, with that decision being a, quote, relatively close call. For policymakers, the notes show that nearly every member of the bank ultimately decided they needed to see more encouraging economic data before slowing bond purchases, even though they were aware that Wall Street was expecting a pullback.
And on Wall Street, most stocks appeared to get a slight Yellen bounce today, with the Dow and the S&P ending a bit higher, despite continued political stalemates in Washington. The Dow added 26 points, the S&P was up a point, but the Nasdaq ended down again today, falling to a one-month low.
Well, today's session marks the third straight day of declines for the Nasdaq index, with a lot of pressure on technology stocks, which have seen some of the street's largest gains this calendar year so far. Josh Lipton joins us now from Silicon Valley with more on what's driving the Nasdaq lower. So, Josh, which kinds of stocks, which specific ones are getting hit the hardest?
Well, I think, Tyler, in general, what you're seeing right now is a lot of high-flying stocks getting hit the hardest. So it is a lot of those internet names. You know, the higher they go, the harder they do fall, as my friend Paul Hickey at Bespoke likes to say. So you are talking about those internet stocks, names like Facebook, which is now down about 8% from its record high. LinkedIn is down about 13% now from its record high. But even with that pullback, of course, Tyler, you know, these stocks have soared this year. The analysts at Cantor Fitzgerald, they actually track this index of the 65 biggest internet names. So it's Facebook, it's LinkedIn, it's Amazon, it's Netflix, Baidu. As of Friday, year to date, that index had surged about 52%. So a big move in these names, Tyler.
And is that what's behind it, Josh, or is there a timing element here? Because you wonder, given what's going on, why stocks are getting hit at this particular point.
Yeah, I mean, it's interesting. I was actually talking to some traders at the NYSE today, and some of them were pointing out, listen, if you were concerned about this shutdown, if you were worried about the shutdown, if it had gone on even longer than maybe you first anticipated, then why not trim some of those gains? And some of these really high-flying stocks move to the sideline until you see some resolution or at least some clarity about what's going to happen next inside the Beltway soon.
You know, Josh, obviously Washington is the trump card, but earnings are very potent as well. Could that cause further volatility as we begin to get the numbers from some of these tech companies?
Yeah, sure. I mean, listen, Alcoa, of course, informally kicking off the earnings season. I think if you're a bull, then you are wagering that you are going to see, Tyler, some resolution in D.C. and also that you're going to get a positive earnings season, that you're going to get better than expected data points for traders, investors, and analysts to look over. And that'll provide, hopefully, the next positive catalyst for the stock market. Guys?
All right, Josh. Josh Lipton reporting for us from Silicon Valley tonight. Thanks, Josh.
Josh mentioned the situation in Washington. Well, it's day 9 of the partial government shutdown and just 8 days to go before the government hits its borrowing limit. But today, some signs of a possible thaw in Washington to end that political deadlock. President Obama will meet with Republican leaders at the White House as pressure builds on both sides to resolve the budget impasse and avert another financial crisis and a possible default on the country's debt obligations. Also today, congressional leaders from both parties met, and a charity called the Fisher House Foundation announced that it would pick up the costs associated with the suspension of death benefits for fallen members of the military.
Many on Wall Street say they're sure that officials in Washington will work out a deal to raise the nation's borrowing limit and avert another financial disaster. But one of the nation's biggest money market mutual fund managers appears to be hedging its bets. Fidelity Investments says it's been selling off its government bonds over the past few days, or at least the debt that comes due right around the time the nation will hit that credit limit next week. The company remains confident, it says, that the debt ceiling issue will be resolved, but said it's taking these precautions to protect investors.
And for business leaders, the gridlock in Washington cannot end soon enough. From Wall Street to the boardroom, they're all calling for a resolution in Washington.
You were elected to lead the country on all issues, all of the people in the country, not just your constituents.
We need to basically listen to the will of the people. We need to stop fighting yesterday's elections, and we need to move on to solving tomorrow's problems on a long-term basis.
It's an anathema to anybody in business who has ever negotiated where you make the stakes the end of the game, where you put the whole institution at risk. It's just absurd. And frankly, shame on Congress.
Well, the National Retail Federation joined those voices today. The organization says the shutdown could hurt consumer spending. Here to discuss more is the NRF's chief lobbyist, David French. David, welcome. It's a pleasure to have you here tonight.
Thanks, Sue.
Has that already begun to affect the consumer as we see the infighting and the impasse in Washington stretch on?
Retailers are on the verge of a $600 billion holiday sales season. We anticipate adding 720,000 or more seasonal jobs this fall and holiday season. And we're very concerned that consumers are watching what's going on in Washington and are reconsidering whether or not they're going to be involved as aggressively as we were anticipating. The Gallup's Economic Consumer Index showed a 12-point drop last week. Mm-hmm. It's the largest one-week drop since the Lehman Brothers collapse in September 2008.
David, what are you telling your friends on Capitol Hill?
We're telling both sides to put aside their differences and get back to work. There are serious issues at stake in Washington. We have a tax code that is uncompetitive globally. We have an immigration system that's broken. We need new trade policies that will help us compete around the world. And these discussions aren't happening while the shutdown's going on.
You know, David, how long does it take the consumer, once they do start to pull back, which apparently it sounds like they're starting to do according to that latest poll, how long before they kind of regroup and get back in the swing of things? Or do you think that we'll feel the effects of this impasse in Washington for some time to come?
Well, it's not too late, and we're encouraged that both sides are starting to talk again, and we're encouraging both sides to continue those discussions and end the gridlock right now.
You know, David, I noticed over the past couple of weeks a number of companies, Walmart among them, Amazon also, adding or intending to add tens of thousands of seasonal workers to their payrolls. The government shutdown must throw a wrench into that, both with respect to the paperwork that you need to file for the IRS, but also to the extent that some individuals may have immigration issues involved in their hiring, that you can't get that stuff done as easily with the government shutdown.
Right. Many businesses use E-Verify in order to check immigration status, and you can't use the E-Verify system right now. It doesn't mean you can't hire, but it makes it much more complicated and costly in order to add additional jobs. The uncertainties weighing down on a number of different retail operations. If you're trying to bring products in from overseas, the customs service is working, but other U.S. agencies that support some of those imports aren't working, so it's much harder.
You know, does the smaller retail outlet suffer more than the big retail outlet, or are those small businesses, having gone through the 2008 financial crisis, better prepared this time around?
Well, I think everybody's suffering, and certainly if the consumer pulls back, the suffering will be spread widely. But I think in previous consumer confidence shocks, the customers come back reasonably quickly once the situation's been resolved.
All right, David, thank you very much. David French with the National Retail Federation.
And still ahead, we told you about some of the hidden dangers of Puerto Rico's bonds last evening and how they're tucked away in a large number of muni bond funds. Maybe some you even own. Tonight, we'll tell you what one politician is doing about it, but first, how the international markets closed today.
Hewlett-Packard, one of 3 companies recently kicked out of the Dow, met with analysts to talk about the past year, one that CEO Meg Whitman called a fix and rebuild year. But Whitman also told investors she expects revenue to stabilize next year and for business to accelerate again in 2015. Confidence about the company's turnaround is exactly what Wall Street wanted to hear, sending shares of HP 9% higher on the day.
Also meeting with Wall Street analysts and investors today, Nike, one of 3 newly added members of the Dow Jones Industrial Average. Jane Wells went to company headquarters in Beaverton, Oregon today, getting a first-hand peek at the athletic footwear and apparel giant's outlook for growth.
Nike long ago raced past competitors, but the CEO still insists this is a growth company because the world is a growth company.
Over the next decade, we will see the world's middle-class population grow by 1 billion consumers.
That's a lot of feet to cover. Nike is projecting revenues will grow from $25 billion last year to $36 billion by 2017. Nike.com sales could nearly quadruple. Apparel sales should grow over 30%, and there's a special emphasis on attracting more women.
If you can run a mile, run a race. You know what? Run a marathon.
The company is revamping its strategy in China, hoping to entice shoppers there to wear more than shoes. And it's preparing to grow in Brazil with the World Cup and Summer Olympics.
Well, you know, women's is a fantastic opportunity, and most people don't realize this, but we have a $4 billion women's business today at wholesale. So the retail value of that is probably about double.
This could be a big part of Nike's future, but it isn't yet. The top of this Flyknit shoe is basically made of one piece, so it really cuts down on materials and labor, but it costs $160. There is a less expensive version coming out in April. Some analysts wonder, though, how long it will take for a shoe without any visible bells and whistles to catch on.
I think we trust that consumers are smarter. They realize more and more that they can get a really great product because when they put it on, the feel and the experience of that product is far more innovative than just actually seeing a technology that doesn't really work.
Nike shares recently swooshed to an all-time high, but so did Under Armour, a smaller but fast-growing competitor with huge ambitions. Nike may have Tiger Woods, but Under Armour has his girlfriend.
Nike responds better when their competitors are doing better. They want to keep the distance, they innovate harder.
Beat Serena.
In an economy where consumers seem hesitant to spend, analysts say athletic apparel is a standout. Can Nike protect its lead? The pressure is on to just do it. For Nightly Business Report, Jane Wells, Beaverton, Oregon.
And now to our market focus, where Men's Wearhouse said to Joseph A. Banks, "You're not going to like the way this looks." Men's Wearhouse rejected an unsolicited offer, takeover offer from Joseph A. Bank, which offered to buy its bigger rival for $2.3 billion. Men's said that the bid was undervalued. Both stocks took off, though. Shares of Men's Wearhouse rose 27% to $45.03, and Joseph A. Bank were up more than 6% to $44.33. The cloud computing software maker Citrix Systems warns investors that results will miss current estimates. In a statement, the CEO says he's disappointed but remains confident in the company's strategy. Shares fell sharply after the closing bell, after the regular session at 66.66. Costco missed its earnings estimates. The bulk sales company said higher costs, currency exchange swings, and lower gas prices were to blame for their weaker than expected numbers. Costco also announced plans to open 36 new clubs this year. The company shrugged off the miss and ended the day 2% higher at $114.59.
United Technologies Board of Directors voted today to increase the company's dividend by 10% for the fourth quarter. The company says it has paid a cash dividend every quarter since 1936. The stock rose fractionally to $102.84. And the FDA has placed a partial hold on an Ariad Pharmaceuticals drug trial after a number of patients involved in the study of its leukemia drug experienced blood clots and heart damage. That sent the stock tumbling almost 66% to $5.83.
Yesterday, NBR told you about the looming municipal bond crisis in Puerto Rico. Today, Massachusetts Secretary of State William Galvin announced that he is launching an investigation into the sale of those bonds to the residents of the Bay State. His office sent letters to Fidelity Investments, Oppenheimer Funds, and UBS, inquiring about what fund managers knew about the safety of the island's bonds and when they knew it, whether it was before selling them to investors in that state.
Well, joining us to talk more about Puerto Rico's looming debt crisis and how it might affect your investments is Candace Lee. She's Associate Municipal Credit Analyst at Morningstar. Candace, welcome. How many municipal bond funds have Puerto Rican debt in them, and who's got the most?
Well, thanks for having me. Based on our latest numbers available to Morningstar, we found that there are over 400 open-end mutual funds with exposure to Puerto Rico debt, and the aggregate market value of that exposure is roughly $16 billion.
Puerto Rico's had trouble for some time now, so why would these funds buy that debt? I assume they're reaching for a yield, for an interest rate that's much higher than they can get elsewhere. Is that correct?
Yeah, that's exactly right. So, I mean, Puerto Rico has been facing some pretty severe fiscal strains for a number of years. Their economy has been contracting since 2006. Unemployment's still very high. But at the same time, despite all these strains, they have been able to maintain an investment-grade rating, but have traded at relatively attractive yields compared to other municipal bonds. In addition, they also offer a triple tax exempt benefit, which has been very attractive to U.S. investors, in that the interest income from Puerto Rico bonds is exempt from federal, state, as well as local income taxes where they exist.
As I understand it, Candace, a lot of the muni bond funds that have large slugs of Puerto Rican debt in them are off a lot this year, and that presumes that investors are marking down those prices on the possibility of a default. How do you handicap the possibility of a default? And how should I, if I invest in a municipal bond fund, at what level does the exposure to those bonds become troublesome?
Yeah, so first I would preface by saying that there's a lot of different types of Puerto Rico debt. What's generally been talked about has been the Commonwealth General Obligation bonds, which actually have a constitutional guarantee on that debt repayment. So the Puerto Rico Constitution actually stipulates that payment of that debt supersedes in priority the payment of current payroll expenditures as well as current pension obligations. And they also have the flexibility to reclaim other revenue sources.
So if it's a general obligation, excuse me for interrupting, if it's a general obligation bond, you're going to get paid.
That's what their Constitution is promising. And, you know, and the government has made a number of statements, you know, confirming that they're diligent about, you know, with their commitment to repaying that debt. Now, this doesn't, you know, this doesn't necessarily soften the severe amount of stress that they're currently facing still, however. So as an investor, I would probably want, if I'm invested in general obligation bonds, I'd probably want to hold shorter term bonds than the longer term ones, because we just don't know how the economy may or may not further deteriorate, you know, further out into the future.
Right. So if default is not the likely outcome, what about a downgrade though? And what would that do to the value of those bonds and to the portfolios that hold it?
Yeah, so a downgrade is certainly something that we don't rule out the possibility of. To my knowledge right now, all the credit rating agencies have negative outlooks on Puerto Rico, citing concerns about the very weak economy and whether Puerto Rico will manage to bring in the revenues that they're budgeting for this year. Should a downgrade happen, I think this will probably exacerbate the Puerto Rico bond sell-off that we've already been seeing so far. Recently Moody's downgraded sales tax bonds in Puerto Rico, and already we've seen that the yields for those bonds have jumped up quite significantly. So certainly I think that the market activity that we're seeing now would be further exacerbated if a downgrade were to happen.
Candace, this has been very helpful. I guess the bottom line here is that even if you own just a mutual fund, it's not just a mutual fund, it's a collection of individual securities, and you better know what's in your fund, right, Candace?
Absolutely. We always reiterate that due diligence at the investor level is extremely important. We've seen that there are a lot of single state muni funds, especially some from Oppenheimer, Nuveen, Rochester, some of these single state muni funds that have a significant exposure to Puerto Rico, sometimes 20, 30%, and they've suffered some pretty significant losses year to date because of that exposure.
Candace, thank you very much. Candace Lee is an associate municipal credit analyst at Morningstar.
Coming up, the intersection of technology, education, and business. We'll show you what startups are doing to make learning more effective and more accessible. First, though, how commodities, treasuries, and currencies perform today.
There may be a deal in the works to make federal charges against a hedge fund and its billionaire founder go away, but it will cost him a ton of money if it happens. The Financial Times says the Securities and Exchange Commission is asking for $1.8 billion to make a criminal insider trading case against Stephen A. Cohen disappear. Cohen and his SAC Capital Advisors hedge fund has already agreed to pay $600 million to settle civil SEC charges and avoid a trial.
High on the agenda at the annual Education Summit in New York City this week is combating the skyrocketing cost of higher education. So some investors and entrepreneurs are jumping on a new opportunity: EdTech startups, companies that schools and use the new technology to bring educational opportunities to students almost everywhere. Julia Borston has more.
A hot topic at NBC's Education Nation conference is EdTech, startups which use technology to make education effective and accessible. The internet, mobile devices, and social tools are giving students massive new potential, giving those thousands of miles away free access to the best educational institutions in the world.
Anybody in the world should be able to take high-quality courses, whether at the college level or high school. They should be able to take it freely.
The amount of VC investment in EdTech quadrupled from $154 million in 2003 to $630 million in 2012. Over the same period, the number of companies funded in EdTech quadrupled from 23 to 95 last year.
With inexpensive tablets, with open content, we'll be able to create these blended high schools that give hundreds of millions of kids a shot at college and the idea economies.
One of the areas in EdTech drawing the most attention is higher education. Startups offering free online courses from top universities. Like Coursera, which has raised more than $65 million. It recently started offering paid certification for completed online courses, already generating more than $1 million in revenue. Rival Udacity last month launching an alliance of educators and employers, 9 major companies including Google and AT&T, to help them provide training for employees and to offer online classes and curriculum to help students prepare for tech jobs. Udacity also helps schools like Georgia Tech offer a paid master's program for less than $7,000. But it's not all for-profit companies. Harvard and MIT created a nonprofit called edX.
Online learning and applying technology to a field is a win-win-win for students. They get better education, they get more access.
edX just partnered with a corporate giant, Google, to launch what it's calling YouTube for free online courses to make a class as accessible as a funny video. For Nightly Business Report, I'm Julia Borston from Education Nation in New York.
And finally tonight, an unexpected consequence of the partial government shutdown. No new craft beers. The federal work stoppage has closed the little-known Alcohol and Tobacco Tax and Trade Bureau, part of the Treasury Department that's in charge of approving new craft beer recipes and labels, and even gives the okay to open new breweries. There will still be plenty of beer on store shelves and in bars, but it's the seasonal brews from small beer makers that may have to await the shutdown's ending.
Is nothing sacred?
Nothing is sacred. Don't mess with my beer.
Exactly. All right, that's Nightly Business Report for tonight. I'm Sue Herrera. Susie Garrett is back tomorrow night.
And I'm Tyler Matheson. Thanks for joining us. Have a great evening, everybody, and we'll hope to see you back here tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. We are TheStreet.com.
I'm Tyler Matheson with a Nightly Business Report news brief. President Obama nominated current Vice Chairman Janet Yellen to head up the Federal Reserve, the first woman ever to lead the nation's central bank. Wall Street is confident that she'll continue the easy money stimulus measures championed by Ben Bernanke. So the Dow closed higher by 26 points. The S&P added 1, but the Nasdaq dipped 17 points with pressure on technology shares. Minutes from the Fed's latest meeting show that nearly every member of the bank needed to see more encouraging economic data before tapering stimulus plans. Oil fell $2 a barrel, hitting a 3-month low as U.S. crude inventories surged higher last week. And Men's Wearhouse rejected a $2.3 billion takeover offer from the rival Joseph A. Bank. And tune in to Nightly Business Report here on your public television station.